stuff like that, traders trying to digest what it was, sort of set the tone very early on. As you can see, about half an hour to go on the market. Markets are red a bit, but overall, still trying to figure out where things stand here.
And, of course, the media are trying to figure out where things stand as well, because Sean Spicer held a more conventional news conference today after the unexpectedly one-sided news conference on Saturday. This is What You Miss. I'm Scarlet Fu.
And I'm Joe Weisenthal. Let's look at where the major averages stand as we head towards the close. Bloomberg's Abigail Doolittle standing by.
Hi there, Joe. Well, we are looking at modest declines for the major averages heading into the close. We have the Dow, S&P 500, and NASDAQ all down just a bit, but it is worth noting, and you really nailed it earlier, that we have seen some volatility on the day, a little bit of intraday volatility. Both the Dow and the S&P 500 earlier had been on pace for their worst days of the year, but really pulling off of those lows, and the NASDAQ is almost unchanged again. So we're seeing these spurts of intraday volatility, also shown quite well by the transports, down less than 1% right now. Earlier, down about 1.4%, had been on pace for the worst day since the middle of September. So some of the uncertainty around what the new administration means. And we have come up with a chart. One of the members of our chart team came up with a great chart. He's a real magician. That is Dan Curtis. And this is #BTV 3430 that shows some of the intraday volatility. Basically, the bars in yellow show the total range on a day, so the entire intraday range. And then in blue, it shows the close. So we see more recently there's a lot more yellow than blue. There are some exceptions to this, of course, but it talks to the fact that there is some of that volatility on the day. Typically, this tends to turn into closing volatility, and these bars up are both down and up. They both basically suggest or point to the full range on the day, whether a decline or a gain. Now, the bit of volatility that we're starting to see, still though within that 1% range and for a decline, it's been 70 days since we've seen a 1% decline, is confirmed to some degree by some of the haven assets. We have the 10-year yield down about 7 basis points. This as investors are seeking the haven bonds, so shown in green, telling us that bonds are rallying amid the uncertainty. The Bloomberg dollar index is down about 0.75% on some of the uncertainty. Of course, falling rates do not help the dollar, so a little bit of confirmation there. And then the safe haven of gold also up a little bit, in fact, up about 7% this year, telling us that investors are seeking a little bit of safety there. As for just a few movers on the day, we are looking at healthcare, some deal-busting action. We have Aetna and Humana trading mixed. Earlier, both have been down, but this after a federal judge said basically blocked a deal between the two companies, saying that would be anti-competitive. Now, Jason McGorman, a Bloomberg intelligence analyst, earlier told our team that that's not terribly surprising, but it probably suggests that the deal between Anthem and Cigna is unlikely to go through. But we see both Humana and Cigna higher at this point, and Jason McGorman says that both of these companies have high-value add customer programs that they try to offer at a low cost. So that makes those stocks still attractive, perhaps, to some investors. Scarlett and Joe.
All right. Thank you so much, Abigail Doolittle. What'd you miss? The U.S. security guarantee for Europe was a precondition for European integration. So what does that mean under a Trump administration? Our next guest is Hans Kundrani. He is a senior fellow at the German Marshall Fund of the United States, and he joins us from Washington. So talk to us a little bit here, Hans, about how there's this history of European integration being reliant on a U.S. security guarantee. And now that you have President Trump talking about the possibility of not honoring all the NATO agreements, what that means for Europe's economic interdependence.
Right. Well, going back in the history of European integration, right to the beginning of European integration in the 1950s, this entire process happened within a context in which the security guarantee from the US existed. And in many ways, it was the precondition for European integration to take place. The US kind of pacified Europe. And it's hard to see how that process would have happened without the US security guarantee. So I think the question now is that given that the European Union hasn't moved to a full political union. In other words, it hasn't become the sort of super state that some people thought that it might eventually become, and that it hasn't become independent of the US in security terms. It still depends on the US for its security. I think the question now is whether, now that there's this new doubt, this radical uncertainty about whether the US is still committed to NATO and to its European allies, whether that what might start to happen is that the process of European integration might start to go into reverse. And obviously this happens against a background in which Europe has been struggling anyway over the last 7 years. There are these fault lines between Europeans, and it's very difficult already to see how Europeans move further ahead with integration. And now on top of that, you have Trump, which creates this added uncertainty.
Right. That's what I just wanted to get to that point. So, in theory, were Europe to be further along in the integration project, that perhaps the U.S. could pull back a bit. But how critical is it that not only are they not fully there yet, but they're already showing signs of fraying, essentially, since the start of the Eurozone crisis?
Right. I mean, exactly. This is the moment when you needed to have a very united Europe, and one which had, in particular, a much more advanced security defence policy that would enable it to become independent of the United States. But you don't have that. Instead, what you have is, as I say, this increasing animosity between EU member states that's developed over the last 7 years since the Euro crisis began. An unwillingness to move ahead with further integration, including, by the way, in Germany, which I think is the most crucial member state in this respect. And so it's very difficult to see how Europeans now pull together in the way that they kind of need to. In fact, the danger is, as I say, that the reverse might happen. There have already been, in the last couple of years, there's been a lot of discussion around disintegration, European disintegration, the centrifugal forces within Europe. And the fear now, I think, is that Trump sort of accelerates or strengthens those centrifugal forces.
Now, you mentioned that there might be military power coming back in as a factor in relations between the different EU member states. You mentioned Germany. What does this mean for a country like the UK, which is, of course, trying to extricate itself from the European project?
Right. I mean, Brexit is the other part of this. In a way, it's the first major step in disintegration that's taken place, and that's particularly problematic. Not just because Britain is one of the biggest, most important EU member states, but also because, specifically in terms of military capabilities, it's one of the two most important EU member states. One of the two with its own nuclear deterrent, and those are precisely the kind of capabilities that Europe may now need if it can no longer rely on the US. So the whole question of Britain's role and what the future relationship with Britain might be is a sort of added complication that further weakens the EU.
You mentioned Germany, and there's been a lot of criticism over time of Germany's unwillingness to step up and do more, whether it's push ahead with fiscal transfers, even, there's been criticism that it doesn't spend more on military. Are those criticisms founded? I mean, the typical German response is, we want to have more integration, but other steps need to come into place. Could Germany unilaterally show more leadership in getting the project to integrate further?
It can't really do it unilaterally. I mean, what you need is a grand bargain, essentially, between different EU member states, and in particular between France and Germany. And that's really been the core of the difficulty over the last 7 years. Is that France and Germany have been in very different places as far as what kind of steps are needed to solve the euro crisis. And 7 years on, that gap between them still exists. It may now be that they're able to kind of reach that kind of grand bargain, but I'm rather sceptical that can happen. And then, on the other hand, you have, as you mentioned, the fact that Germany underspends on defence. It spends 1.2% of GDP on defence. NATO members are committed to spend 2%. And defence spending has been gradually increasing in Germany, but nowhere near quickly enough. And now, as I say, you have this radical uncertainty about the US security guarantee. And even after that, Chancellor Merkel doesn't seem willing to sort of dramatically increase defence spending as a response to Trump. And so I think you have this situation of real uncertainty about European security and about the future of the EU.
All right, Hans Kunani, Senior Fellow at the German Marshall Fund of the United States, thank you very much for coming on.
Coming up on What'd You Miss, we'll have your deals report and hear from Frank Aquila of Cromwell & Sullivan. He will talk about what pharmaceutical M&A will look like under a Trump administration. This is Bloomberg.
What'd you miss? Today, Aetna's $37 billion deal to buy rival insurer Humana was blocked by a federal judge. Earlier today, Bloomberg's executive editor for global deals, Jeff McCracken, got perspective on M&A under President Trump from Frank Alcala, M&A partner at Sullivan & Cromwell.
We don't know a lot yet as to what he's actually going to propose and what's actually going to get through Congress. But what we do know is he's appointed a very pro-business cabinet. That portends good things. He's already, through executive action, put on hold regulatory further regulations. He's has basically a regulation czar and has talked about cutting back regulations that impede business. We know we're going to get corporate tax reform, and that's going to lead to a more efficient economy. So all of those things are going to be very, very positive for the economy, and ultimately what drives deals is a strong economy. So I think those are going to be things that are going to be very positive for deals, and I expect we're already in the midst of a positive deal cycle, and I think it's going to continue, at least with respect to domestic M&A.
So repatriation, that's one of the things I think that whether we're talking about Paul Ryan or Donald Trump or whatever, the Republicans want to repatriate or allow these big companies who have billions in offshore cash, allow them to bring that money back. You think that's a positive thing for M&A?
It's going to be a positive thing. It's going to be a positive thing not only for M&A, but also reinvestment in the United States. There's probably over $2 trillion outside the United States that it could be brought back. Now, some of it's going to be kept overseas because companies need it for reinvestment over there. But a big chunk of that's going to come back. It's going to pay down debt. It's going to allow companies to reinvest, and a big chunk of it's going to, of course, be used for M&A.
Right. So on the flip side, what would concern M&A professionals like you or your clients in the C-suite? What would concern them that Donald Trump has talked about or that he might propose, and how would it impact M&A?
I think the biggest concern clearly is around trade, because many U.S. companies export an enormous amount. Also, a lot of M&A, as you know, is cross-border, and to a certain extent, will companies outside the United States be reluctant to acquire in the United States? Will U.S. companies be interested in, or will they be concerned that if they acquire a company in Europe or Asia or Latin America, that suddenly they're going to be bashed for that? So I think, cross-border M&A might be a little bit touchy, at least in the first few months.
You expect there'll be a bit of a wait-and-see period? Say people are going to wait 3 or 6 months if they're looking at a big cross-border deal before they move on, that kind of thing?
I suspect so. I haven't heard definitively from clients on that, but it's something you have to be concerned about.
Okay. Since the election results came down in early November, the market has reacted quite well. I mean, the stock market is way up, I don't know, 10–20% since early November. Does that help M&A when the equity markets have pushed up stock values?
It helps in the sense of if you're an acquirer and you're going to use stock for the acquisition, it allows you to buy another company with your currency. However, if you're buying for cash and the target company has gone up, it's more difficult. To some extent, some companies have gotten ahead of where their earnings are. The stock market went up in expectation that we're going to have a better economy, a stronger economy. So, we'll have to see. I think high valuations for companies somehow dampens acquisition activity. If the belief is we're going to have greater growth than we've had the last few years, 2.5%, 3%, if it's going to be greater than that, I think it will fuel M&A, despite the stock prices. Obviously the biggest factor in M&A, at least from what we can see here in the journalistic side, is the regulatory world and the regulatory scrutiny. Just a few minutes ago, the deal that Aetna and Humana had put together a couple years ago has been blocked by a judge. Do you sense, and what do the lawyers sense, they feel like this is going to be an easier, a less scrutinizing, if you will, administration when it comes to deals? I suspect so, and I think in all probability that's what we're going to see. 2015 was the largest year on record for M&A transactions. 2015 was the largest year, 2016 was the largest year on record for busted deals. And I think we're going to see less regulatory intervention. I think there's a place for the antitrust laws, there's a place for all regulators, but needless regulation and interfering with good, positive consolidation, there's no place for. And I think we're going to see more rational behavior by the regulatory agencies going forward.
That was Bloomberg executive editor of Global Deals, Jeff McCracken, with Frank Aquila of Sullivan & Cromwell.
It is time now for the Bloomberg Business Flash to look at some of the biggest business stories in the news right now. The SEC is investigating previously disclosed data breaches at Yahoo that compromised more than 1.5 billion users. At issue, whether those breaches should have been reported to investors sooner. According to the Wall Street Journal, the SEC issued requests for documents in December, while it looks into whether Yahoo's disclosures about the cyber attacks complied with civil securities laws. Yahoo is expected to release earnings after the bell today. California-based network testing Ixia is said to be attracting takeover interest from technology-focused private equity firms. That's according to people with knowledge of the matter, who say that the sale could value the cybersecurity company at about $1.3 billion. Thoma Bravo, Silver Lake Partners, and Vista Equity Partners are among firms considering final bids. Ixia shares gained more than 60% over the past year after a potential sale was reported. iHeartMedia is said to have succeeded in its efforts to get most investors to participate in a bond swap to help reduce its $21 billion in debt obligations. That's according to a person with knowledge of the matter, who says that some of the largest 2018 bondholders who had refused to take part finally caved after the biggest U.S. radio station owner won them over by extending a previously expired early tender deadline that would grant them new notes of about the same value. The disturbance in the force at Disney today can be described in a word: excitement. That's after the announcement of the next installment in the Star Wars saga. Episode 8 will be titled Star Wars: The Last Jedi. The Star Wars spin-off Rogue One was released just last month and has already passed $1 billion at the global box office, according to Disney. The Last Jedi will be hitting U.S. theaters December 17th. And that is your Business Flash update. I love that name, The Last Jedi.
That is a good name. So does this mean it's going to be the last one? Probably not.
No, I'm sure there's more to come. But have you seen Rogue One?
What?
Have you seen Rogue One?
No, is it good?
I didn't see it. My kids and my husband went to see it, but you haven't seen any Star Wars movies?
At some point, I'll watch them.
Wait, hold on. You've never seen any of the Star Wars movies?
I don't think so. Are they good?
The original one, the Episode 4?
Yeah, never.
Return of the Jedi? Empire Strikes Back?
Never
wow. Seen. All right. Get on him on
Twitter.
Twitter.
To embarrass me on TV.
No. I'm not trying to embarrass you at all. This is what makes you amazing. All right, coming up next, a major emerging market ETF is showing signs of trouble. We've got the chart to prove it. This is Bloomberg. I'm Scarlet. What'd you miss? It is still a bull market for the S&P 500. We saw how U.S. equities rallied after the election. Although it's cooled a little bit, we're still holding near record highs. And this is the extent to which we haven't seen any kind of sustained pullback. So you want to look at the top panel. The red line here is a 1% drop in the S&P 500. And the S&P has not had a drop of more than 1% since October 11th. That is the longest such streak since going all the way back to 2006, which gives you a sense of just how limited the movement to the downside has been in equities. So if you look at the bottom panel, no surprise then that that limited decline of that size has meant that the VIX has held near a 2.5-year low. Joe, when you look at the VIX, it really doesn't show any kind of stress that you might anticipate given all the uncertainty, economic policy uncertainty that's out there.
It really is unbelievable. I mean, it's surprising enough everybody got it wrong that the market has done this well since the election. But the fact that there hasn't even been one day of any real sell-off at any time, given all the things that have could have come up with headline risk and all that
Individual
not on a
stocks,
single
yes,
day.
but not the major index.
Yeah, no, lots of single stocks, lots of sectors that have done poorly or better. It really is extraordinary how stable the headline numbers on the index have become. Great chart. Also, it's just crazy how many back in 2008, how many one day down.
Yeah, that's
it's easy to forget how wild that time was. All right, I'm looking at other stocks, this time around the world, particularly emerging markets, because we have another death cross, and that's the most fun thing in charts. This is a chart of EEM. It's the iShares MSCI Emerging Markets ETF. And if we go over here, since the election obviously took a really big tumble, there was the strong dollar, the concerns about global trade. It really tumbled hard, then it bounced back a little bit, then down. It's been on a nice rally, but there is this death cross forming where the 50-day might cross below the 200, so something that the momentum technical people might want to keep an eye on. Lots of cross currents with emerging markets. If the dollar rally runs out of steam, theoretically, that could be good for EM. But as Trump continues to hammer on the trade stuff, that could be bad. So lots to pay attention to. with the EM, because really sort of right at the center of a lot of policy stories going on right now.
It's been on the cusp of that death cross for a few days now. It's just kind of holding steady. And
if you notice, too, it's close to erasing the post-election loss quietly. Hasn't really gotten that much attention. So I think you could look at that chart and see good things and or bad things.
Right. And I love how the talk about being worried about China has come up again. Every time we see emerging market
are we worried about China again?
Yes, I keep hearing it over and over again.
I always forget
how that's a looming threat on the horizon.
It's always there in the background.
Okay, the market close is next. Take a look at the major indexes with less than 4 minutes to go before the close. The Dow losing 22 points, the S&P 500 down by 0.25%. And of course, the NASDAQ little change at this hour, 55.54. From New York, this is Bloomberg. Moments away from the closing bell. What'd you miss? U.S. stocks falling with the dollar today. The S&P 500 retreating to a 3-week low after President Trump said he would shake up the country's trade and tax policies. I'm Scarlet Fu.
And I'm Joe Weisenthal. If you're tuning in live on Twitter, we want to welcome you to our closing bell coverage every weekday from 4 to 5 p.m. Eastern.
We begin with our market minutes. A decline here for stocks. They did close lower on the second business day of Donald Trump's administration here. You can see the S&P losing 6 points and Dow Industrials off by 25, moving ever farther away from that 20,000 level.
Modestly lower. Not a big sell-off. They had been lower earlier in the day, coming back later in the afternoon. In the end, Pretty close on change.
And if you look at the sector breakdown, it's pretty even here. 11 sectors in the S&P 500, 6 are down, 5 are higher. The laggard here was really energy, off by 1.1%. Everyone's looking very closely at oil prices, but of course also at companies like Halliburton, which reported the oil services company did return to profitability, but the numbers were not up to par. North American revenue rose 9% quarter on quarter. Investors were hoping for something more. The stock down by the most in more than 4 months. Another pair of companies we're keeping a close eye here on, Aetna and Humana. A federal judge blocked the deal. Aetna now owes $1 billion breakup fee to Humana as part of the transaction. You can see Humana up 2.3%, Aetna down 2.7%. We're still waiting on any kind of update on the other big deal, of course, which is Cigna and Anthem.
Let's look at government bonds, starting with U.S. 2-year and 10-year. Both of those down fairly significantly. As Scarlet noted, one of her charts, the big gainer in equities today was real estate, the bond proxies, and it makes sense because we saw a nice bounce back in the treasuries. Not much data today, but they seem to rally early on after some of Trump's comments about border adjustments. We'll be talking about that some more. In fact, if we look at an intraday, there was a lot of noise before the bell around 8:39 when Trump comments about taxes first came out. Then we saw yields fall through much of the day before recovering a little bit in the afternoon.
And in currencies, the dollar is weaker, the yen is gaining, so we're seeing some risk-off sentiment driving the FX market. The yen, in fact, rising against all the major currencies. You're looking there, dollar yen, euro yen, and Aussie yen, all indicating a stronger yen for the most part. The Mexican peso on a 2-day chart, you could see there we recovered a little bit, but at one point the peso gained as much as 3.2% over the past 2 sessions. That was the best 2-day rally since before the election. We know the foreign minister is due to meet with some of Donald Trump's deputies to discuss trade on Wednesday. And of course, both countries' presidents will be meeting on January 31st. And speaking of our trading partners to the south, let's look at our trading partner to the north, Canada. Dollar Canada at session lows here. Investors shrugging off President Trump's threat of a border tax. There are some comments from Canada's ambassador to the U.S. leading to confidence that Canada will negotiate its own bilateral agreement with the U.S. that won't have a negative effect on their economy.
Maybe all that much is priced in. Quick look at commodities, starting with oil and gold. We can see oil slipping a bit, but remaining above $52 a barrel on West Texas. Really not much action. Gold futures ticking up a little bit, but less than 1%. Sort of part and parcel with that Treasury rally. Some of those underloved safe havens getting a bid today. And cotton having a big day today was one of the lead gainers. Softs in general doing well, up 2%.
Those are today's market minutes. What'd you miss? President Donald Trump met with business leaders this morning, promising to impose a major border tax on companies that move jobs outside the U.S.
A company that wants to fire all of its people in the United States and build some factory someplace else and then thinks that that product is going to just flow across the border into the United States, that's not going to happen. They're going to have a tax to pay, a border tax, a substantial border tax.
Here to talk more about taxes, manufacturing, and the dollar is Bloomberg's Director of Economic Research and Chief Economist, Mike McDonough, and Stephen Englander, Global Head of G10 FX Strategy at Citigroup. Mike, I want to start with you. Can the administration design a policy that specifically goes after would-be outsourcers? Because it doesn't even seem like it's so much about importers overall. It seems to be really about those companies that are based here currently that might be thinking of shipping jobs to China, Mexico, wherever.
Well, ironic you asked this question. I was just having this discussion with some other economists, some of my peers, not at Bloomberg, and we're scratching our head over this. We don't think so. But who knows? We think that we don't see how you can implement a tariff that impacts a single company, or if you did it, you would have to impact an entire product. Which is a possibility. Or is he just kind of using rhetoric to kind of bully his way to get what he wants and not actually follow through with anything?
Stephen Englander, how do you interpret what he said? What do you see what he's trying to pursue here?
Well, he seems to be pursuing his own concept of justice rather than one of efficiency, in the sense that if you hamper U.S. firms that want to produce abroad and re-export back into the U.S., but don't do anything to foreign companies that produce abroad and export to the U.S., you haven't really gotten the jobs on the factory floor that you've promised. You've just shifted the source of imports from U.S. companies to foreign companies. So I think it's I think he has an understanding of what he wants, but I don't think he's thought it through in great detail.
On how to get there. So what does that mean for traders, foreign investors who are sitting here expecting a stronger dollar because of what the Federal Reserve is going to do and how that differs from other central banks, and yet hearing from the president that we don't want a strong dollar, we should have a weaker dollar?
Well, I think that he's trying to row uphill on that one. I mean, if we get the kind of stimulus either that's built into the House bill or that's built into his bill when we're at full employment, it's going to be very hard to argue that the dollar should be weaker, no matter how much you say it should. So I think that one, the market is kind of waiting to see exactly what they do, whether if they follow through on the fiscal stimulus, and both plans have a decent amount of Keynesian stimulus in the first couple of years, not just incentives. If they follow through with it, the dollar is going to go up and go up very significantly. We don't have the capacity to produce, given that we're at or very close to full employment.
Mike, if there were a coherent plan, so you were sort of skeptical that such the tax plan as he envisioned it. Stephen called it justice as opposed to necessarily policy. In theory, could a plan, if there were, does a coherent plan exist out there to actually revitalize American manufacturing?
Not yet.
Jobs?
Not yet. I think that what we're missing is, the fact that manufacturing is no longer somebody sitting in a line, moving, putting something into something in a very simple task. It's now quite sophisticated. It requires a specialized skill set. So, I mean, the idea of reforming the corporate tax rate, that could be a big boon to manufacturing. But that's all that's been discussed. If you really want to save jobs and make it sustainable and create a renaissance in U.S. manufacturing, let's call it, you need to be thinking about how do we fill the skilled jobs that manufacturing companies can't fill right now. They could be kind of people are operating machinery, the people are programming the machinery. These are the type of things we should be focusing on. One short-term fix to that is if you allowed, and this is very controversial, I think, in terms of the views of the administration, is actually allowing more foreign skilled labor into the country to fill those gaps. Longer term, you need to think about how do you incentivize people to study vocational skills, or the so-called STEM degrees, right, to really get behind the science, engineering, and mathematics. And if you start doing this, then you really could have a more sustainable recovery in manufacturing and make it great again.
We talk so much about saving the manufacturing jobs. It seems like the goal really is to save high-paying or quality-paying jobs that don't require higher education. Isn't that what we're really saying? I
think so, and we've been talking about these jobs ever since the construction jobs disappeared, 8-9 years ago, and over the last 30 or 40 years as manufacturing jobs have disappeared. I think one thing that will be a source of disappointment, unless the protection levels are pretty high, is that the wages paid in manufacturing, even in formerly high-paying manufacturing sectors, just aren't that high anymore. Firms can't afford to pay that. So we could get the jobs back, but it's probably certainly not going to be in the ratio of some of the durable goods jobs to the average job that we saw in the 70s and the 80s. The wage premium on those jobs is going to be much lower.
Stephen, from a trader perspective, you mentioned that if some of these stimulus programs go through, that could be theoretically dollar bullish. But in the meantime, as you say, we hear these comments from the president that don't necessarily sound like a coherent plan. It doesn't seem like those kind of stimulus are really at the front of his mind. It's really more about this sort of specific stuff with outsourcers. So how does a trader position for this theoretical stimulus that doesn't seem to be sort of at the top of the agenda?
Well, I think that's why the euro's trading 107.49 right now, that the market is beginning to lose patience and figure this is going to be a longer haul than they thought in November and December till you get a plan. The other part is that there are competing plans out there. There's the House plan, which you may agree with or disagree with, but at least it kind of holds together. And, so far the Trump plan has not been very much elaborated, but seems to have a huge fiscal hole. And you could choose one or the other, and the dollar would go up and go up significantly, but you can't choose neither. And right now the market is beginning to worry that there's going to be so many distractions that neither might go through.
Michael, in one of your columns, you wrote that Donald Trump can miss his 4% GDP target, yet can still win. State the case for that.
Well, I mean, 4% sustained 4% growth for the U.S. economy is extremely high by historical standards. Really, as long as he could get growth to about 3%, you'd be used to the kind of quality of life improvements over the years that we've become accustomed to as Americans over the past several decades. So, I mean, 4% is probably aiming a bit too high. 3% is probably more right. So I think he's aiming a little bit too high, but if he got to 3%, it would still be good. But can I elaborate for a moment on the dollar? I mean, you can't have strong U.S. economic growth and not have a strong dollar, right? So I think worrying about the dollar being too strong is a bit misguided at this point. The dollar could get too strong, but we're not there yet, right? Right after the Great Recession, we saw QE, we saw a weak dollar. This helped really drive the external sector. And this was really an important pillar of growth at that point. Now, though, the important pillar of growth is the consumer. And a strong dollar is actually beneficial for the consumer because it helps increase their buying power. So, you know, right now with where the dollar is, it's not really too strong. If it went up significantly higher, it could be a concern. But really, you're not going to follow through with strong growth without having a strong dollar.
Yeah, I think that insofar as the market is reacting to comments like the dollar is too strong and so on, the dollar's really high, the fear in the market is this, that instead of having a coherent plan and, you know, a fiscal plan, you know, like the House or like Trump's, you're going to have no fiscal plan, but you're going to spend your time sort of poking at China and poking at Mexico, complaining that the dollar is high and that they're cheating. But at the end of the day, you don't end up with something. And I think that that's sort of the issue, that the more you sort of talk specifically about, you know, China as if there isn't a third, fourth, and fifth lowest cost producer out there that would take China's place, the more the market is worried that you're going to go off on this tangent.
Kind of an anti-plan. It's kind of just
exactly
very interesting stuff. Thank you very much, Mike McDonough, Bloomberg Intelligence Chief Economist, and Stephen Englander, Global Head of G10 FX Strategy. You'll be sticking with us to talk about Europe. This is Bloomberg.
What'd you miss? Yahoo set to report fourth quarter earnings any moment now. Bloomberg editor-at-large Corey Johnson joins us now from San Francisco with more. Corey, actually, you know what? Yahoo numbers just came out, so perfect timing here. And we are looking at fourth quarter adjusted earnings per share beating analyst estimates, 25 cents versus the consensus estimate of 21 cents. In terms of revenue, ex-TAC, which is revenue that is passed on to partner websites, $960 million higher than the anticipated $907.9 million. So, Corey, when we look at the company's earnings, they don't really move the stock price anymore because, of course, Verizon is buying some of Yahoo's key assets there. The question is, will we get an update from the company on the data breach that has caused Verizon to rethink how much it pays for those assets?
We're going to get as little as possible in these earnings because the company's announced they're not going to give us a press conference. They're not going to give us a conference call for investors. Whatever we get in the release is all we're going to get this time around. And that is a signal, perhaps, that they're so close to closing this deal with Verizon that they don't feel the need to update investors. So the numbers are all we got.
Right, I'm seeing this quote from Marissa Mayer. With our 2016 and Q4 financial results ahead of plan and the continued stability in our user engagement trends, the opportunities with Verizon looks bright. It talks about how integration planning is the #1 priority.
And in fact, there's another headline here that Yahoo now sees the deal with Verizon closing in the second quarter. Was that as planned, Corey, to close by the second quarter?
That's been the plan all along here. It's been more tentative than that going back. But, you know, what she doesn't say, though, the user engagement numbers might be good, but the revenues are down 4% year over year. Now, that's an improvement on the trends of the last few quarters where we've seen double-digit declines on the top line there. Nonetheless, the belief at Verizon is that they can take this declining revenue set, stop that bleeding there, if you will, and then turn those operating margin numbers around and actually offer a lot of these services on a mobile basis, and offering them mobily and through the Verizon network, actually raise the revenues somewhat, have a better ad platform with that, and actually make some more money on this company.
So we see the stock, it's actually up 1.8% after hours. Essentially, this is not about the results, but about increased likelihood traders are betting that the deal is going to be closed based on these comments.
Absolutely. I mean, you put that every way of saying these results do suggest that there's not a further impediment to closing the deal. But ultimately, the ceiling on the price of stock is going to be what Verizon has offered for the company here. And I'll say it again, that Verizon really thinks they're getting a steal. When they look across all of the potential assets of any internet company, and they look for those very few companies that reach over 1 billion people every day, they see Yahoo as the very cheapest way to acquire 1 billion daily active users. And they think that that's what they're getting here at a discounted price. It's not Facebook, but it's not at a Twitter kind of valuation either. It's at this Yahoo valuation that they see to be really a steal.
I'm looking at more headlines. Yahoo is sharing some engagement trends after the hack disclosure in December, saying that searches and email engagement were hit by the holiday seasonality, and that searches and email engagement have mostly recovered. Corey, we know that Verizon is buying a lot of the assets, but not buying the key assets of Yahoo Japan and the Alibaba stake. Do we have any sense of what happens to those stakes?
Those are going to be spun off into a separately traded entity, and that separately traded entity will allow this to exist as a sort of a tax-free. It's essentially a stub of the Alibaba business and a stub of the Yahoo Japan business, but it continues to exist here, trading essentially in what is probably the same QSIP, not to get too technical, but the same QSIP as Yahoo shares themselves, and that allows this to be a tax-free spinoff, at least in the minds of the Yahoo advisors and the chief financial officer, Ken Goldman.
All right. Bloomberg's Corey Johnson, thank you so much. And of course, as we were just discussing with Corey, Yahoo's fourth quarter adjusted earnings per share beating analyst estimates, and revenue ex the revenue shared with partner websites also topping the consensus estimate.
We see the stock up there about 1%. Up next, as the French presidential election heats up, how have bond yields been responding? We'll look at that next. This is Bloomberg.
I'm Scarlet Fu. What'd you miss? Stephen Englander, global head of G10 FX strategy at Citigroup, is still with us as we take a deep dive into the Bloomberg. If you're at home with your Bloomberg, you can follow our charts using the function at the bottom of the screen. And I want to start with how the percentage of treasuries held overseas has been coming down. So Donald Trump enters office as foreigners sell down their holdings of treasuries. Let's pull up the chart right now. And of course, as foreigners reduce their stakes, that means less demand, lower prices, and therefore higher yields and higher borrowing costs for U.S. investors and Americans overall. Overseas investors at one point owned more than half of marketable debt when Barack Obama became president, now have just 43%. Stephen Englander, as we talk about Donald Trump beating on China as this trade, as a potential trade war partner, as a currency manipulator, do you see China cutting down its holdings of treasuries further than it already has?
Well, quite possibly, but I think China's been trying to do the diplomatic high road till now, and that the CNY has been depreciating for most of the period. It's appreciated for last 10 days or so, and so I think that China's been defending its currencies and selling treasuries in order to defend CNY. I don't think that they're using their U.S. Treasury holdings aggressively to send a warning shot.
As a retaliatory measure.
Yeah, that might come, but I think we're far from it. I think so far they recognize that he hasn't done anything.
And it's talk.
They want to see what happens.
Does Trump get a pass because he doesn't know the rules? In other words, that theoretically some of these diplomatic faux pas, maybe under a different administration where there were a lot of people who really understood the intricacies of foreign policy.
Or the protocol.
Yeah, but because do you think that sort of earns him some space because everyone's like, oh, well, it's Trump.
I think he
may not be trying to offend us.
I think it earns them space for saying stuff that doesn't go over well,
right.
But it doesn't earn them much space for doing stuff.
Right. Eventually, policy is a real thing. Let's talk about Europe for a second, because in the last segment you talked about euro going back above $1.07. And, it's sort of this tricky thing there because the economy seems to be getting better. But on the other hand, there's still a lot of political tension. If we go into the Bloomberg, I'm looking at a chart of French spreads. The white line here is French-German spreads, and you can see that the cost of France to the cost of French yield is going higher and higher relative to Germany. And then the blue line is the Spanish-French spread, signifying that the gap between France and Spain is narrowing. So obviously there's some anxiety about France out there. This election is going to be going on for a while. Everyone says there's no way Le Pen can win, but after what we've seen so far this year, no one really takes that seriously. So how do you sort of think about the cross currents with respect to the euro between the politics, which don't look that good, and the economics, which seem like they're getting better?
Well, I think partly they reflect the same thing, because part of the reason the economics looks better is because the EU has loosened budgetary restraints to enable countries to deal with the refugee situation. So I think that there's an element that that's improved the economic data. On the other hand, it's the same factor that's causing the political stress that we're seeing there.
Right.
And I think ultimately the political stress would dominate if in any major Eurozone country we have a party voted in that looks likely to leave. And I think it would be not just the France if Le Pen is voted in, but that would very quickly, turn up that blue line along with the French line and put stresses on the other peripheral countries.
Would that be a global financial event where something like, I mean, I know, everyone got sort of the ramifications of Trump and Brexit kind of wrong, but it seems as though that were a Eurozone member to come in and who wanted to leave, that'd be a big deal. Would that cause global market ripples?
I think so, but, even Marine Le Pen is beginning to slow it down a bit. Not saying that, I'm going to leave the day after, but, basically indicating that she wants a different system, but not quite being as aggressive in terms of the departure timetable. But I think it would be big. I think we'd see German yields getting very, very negative. And I think we'd see the euro sell off and these peripheral spreads all widen.
So we're all focused on Marine Le Pen perhaps becoming president or gaining power. Troy Gajewski of Skybridge Capital was telling us that maybe we're all thinking about it the wrong way. Maybe there's a white swan in France in that you would get a center-right, a pro-right, pro-growth kind of leader in France. And no one's thinking about that because we've been we've been
conditioned
sidelined,
to
by
imagine
Brexit, by the election of Donald Trump.
Well, Francois Fillon, who looks likely to be the center-right candidate, he's been around for a long time. And, he's not viewed as a revolutionary in terms of economic policy or in terms of any policy. He's kind of a steady pair of hands. So, there could be a white swan. I'm not sure it's him.
All right, Stephen Englander, Global Head of G10 FX Strategy at Citigroup. Thanks so much for joining us today.
Thank you.
Coming up, the Senate Foreign Relations Committee about to vote on the confirmation of Rex Tillerson as Secretary of State. You're looking at a live shot there as they discuss it. And, of course, we'll give you that and the status of President Trump's other cabinet picks. And you can watch the proceedings, the voting on the Senate floor on the Bloomberg at Live Go. From New York, this is Bloomberg.
Decision for you.
I'm Emma Chandra. Let's get to First Word News this afternoon. The Trump administration says it is willing to partner with Russia in the fight against the Islamic State group. Speaking at his first White House daily briefing, Press Secretary Sean Spicer said President Donald Trump has been very clear that he will work with any country committed to defeating terrorism.
I think if there's a way that we can combat ISIS with any country, whether it's Russia or anyone else, and we have a shared national interest in that, sure, we'll take it.
Meantime, Russia said today its warplanes flew a joint mission in Syria against the Islamic State group with assistance from the US-led coalition. The Pentagon has not confirmed that report. President Trump is taking aim at a trade deal that he says would hurt American workers. He has signed an executive order pulling the U.S. out of the Trans-Pacific Partnership trade deal. Congress never formally authorized the agreement. The president also placed a hiring freeze on some federal workers and cut off funding for international groups that perform abortions. Defying U.S. President Donald Trump's calls for border taxes, Mexican President Enrique Peña Nieto said today North American trade should remain free of all tariffs. The speech was widely attended by lawmakers, business representatives and union leaders. Peña Nieto promised Mexico will present a united front to defend its interest as the nation begins talks on trade and immigration with the U.S. British Prime Minister Theresa May's legal challenges won't end tomorrow when the Supreme Court there rules on who has the power to trigger Brexit. The issue is whether May or Parliament has the authority. At least 3 other court cases are pending. One claims that last June's vote doesn't give May the power to pull the UK out of the European single market. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Emma Chandra. This is Bloomberg.
What do you miss? The confirmation hearings for President Trump's cabinet picks are underway. The Senate Foreign Relations Committee is voting on the nominee for Secretary of State Rex Tillerson as we speak, and the vote on Mike Pompeo as CIA director tonight, taking place around 9 p.m. Joining us now to break it all down is Bloomberg White House reporter Kevin Cirilli. Kevin, earlier today, Sean Spicer complaining about the slow pace of cabinet confirmations. What's the schedule? Are they going to get some more in soon?
Well, tonight the Senate will vote to confirm Mike Pompeo, the Republican congressman whom Trump has selected to lead the CIA. Meanwhile, as we speak, senators are gathering on the Senate Foreign Relations Committee to move the nomination of Rex Tillerson. There's good news for the Trump administration because some key Republicans, whom Democrats had hoped would flip their vote and oppose Tillerson because of his business ties with Russia, have decided to support Tillerson after all, most notably Senator Lindsey Graham and Senator Marco Rubio, 2 Republicans from South Carolina and Florida, respectively, arguing at the end of the day that while they have concerns for Tillerson, they ultimately feel like they can support his nomination.
And you're seeing there a live shot on the Senate floor there as the Senate Foreign Relations Committee finishes their discussion and gets ready to vote. Kevin, Marco Rubio is supporting Rex Tillerson's nomination, but he does so with reservations. He's clearly still concerned.
So what's interesting here are the politics behind this, because if you look at people like Senator John McCain as well as Senator Rubio, they are positioning themselves with people like Senator Lindsey Graham to be the Republican opposition within the Republican Party to help serve as a check for President Trump. And so as that continues to evolve, I would look again for that type of leverage to continue, because at the end of the day, while Republicans have a majority in Congress, they do not have a supermajority, and President Trump needs key Republicans, all of his party, quite candidly, in order to move several of these nominations. So he was able to get the support for Tillerson, but it remains to be seen on other key legislative agenda items, particularly on foreign policy, whether or not that support will hold. McCain, Graham, and Rubio sending a message right now that while they're with him on Tillerson, they might not be with him 100% of the way on other key issues.
Kevin, it hasn't gotten as much attention, but the Pompeo vote, some Democrats, including Ron Wyden of Oregon, were not eager to speed this process through, much to the chagrin of the White House. What were their specific concerns, and have any of those been addressed?
Democrats have criticized the Trump administration as well as the Trump nominees for not being transparent enough and not complying with Senate ethics standards, as well as some Senate finance regulations and finance transparency issues with financial disclosures. Now, on the flip side of that, Republicans are arguing that Democrats are simply playing politics with this and using any mechanism that they can to slow down the process. At the end of the day, though, the bottom line is that it's looking increasingly more difficult for Democrats to block any of Trump's nominees.
Are there any of the nominees that the Senate, that the Democrats are supporting, that they've signed off on, they're endorsing?
Well, that's an interesting question. And actually, at one of the hearings that we'll see over the next couple of days with Dr. Ben Carson, I think he might get some support from some Democrats on the Senate Banking Committee, which is voting to confirm him. There was a moment where Senator Heidi Heitkamp, a moderate Democrat, a centrist Democrat from North Dakota, when she actually praised Dr. Ben Carson and said that after meeting with him that she thinks that he might might be the right person after all to lead the Housing and Urban Development Office. It'll be interesting to see where that goes, but Dr. Carson's nomination really shaping up to be one of the least controversial nominations throughout this entire process.
So after Tillerson and Pompeo, who looks like they'll be the next in the door?
Well, the big ones, of course, that we'll be watching here is what's next with Steven Mnuchin, the former Goldman Sachs executive who Democrats are trying to criticize as out of touch with the middle class. Now, I will tell you that I've spoken with sources who have helped brief Mnuchin for last week's Senate confirmation hearing, and they are feeling quite confident that he was able to get the job done. I would anticipate that nomination heading to the Senate floor sometime within the next week.
And speaking of Steve Mnuchin, great timing because there are some headlines here in which he's answering questions from senators saying that the U.S. needs a comprehensive House finance policy approach, and that the Treasury has a range of tools to address unfair trade. He will address the issue of currency manipulation as well. And then he goes off to talk about other things. The U.S. IMF funds must be used in line with policy goals. He would enforce existing sanctions against Iran and Russia.
And the dollar is slipping on this headline. Mnuchin, excessively strong USD, may be negative in short term. And you can see, if we want to go into the Bloomberg here, there's a little bit of a drop, it looks like, on some of these headlines.
Lower.
So this is not huge because this is zoomed very in, but a little bit of a tick down, it appears, on some of these Mnuchin headlines.
So there isn't going to be another day of the confirmation hearings for Steve Mnuchin. That's all done now, right, Kevin? It's just a matter of him answering some of these outstanding questions?
It's a matter of him answering some of these outstanding questions in which he'll issue them in written form, and then the Senate Banking Committee will vote within the committee to move his nomination. Looking at the numbers on that committee, he is poised and in a strong position to get that clear that procedural hurdle. And then after the Senate Banking Committee votes to move that nomination, then it will head to the Senate floor. But again, going off of his nomination, it really looks like he was able to garner the support and keep the support of the Republicans that he needed to in order to clear that first procedural hurdle.
All right, Bloomberg White House reporter Kevin Cirilli, thank you very much. And you can watch the Senate committee vote on the Bloomberg at LiveGo.
Coming up, the slow death of the American shopping mall is hitting certain areas of the country harder than others. We take a look at what big box store closings mean for the Rust Belt communities in particular. This is Bloomberg. I'm Scarlet. What'd you miss? The twists and turns in the Johnson & Johnson Actelion takeover saga, along with recent U.S. political developments, have put the healthcare industry in focus. Ahead of J&J's earnings, let's take a look at the company in today's The Numbers Don't Lie. So J&J is said to have tentatively agreed with Actelion in a price to acquire the Swiss biotech company. A potential takeover of Actelion would allow J&J to utilize its cash pile. It has an estimated $14 billion in free cash flow for fiscal 2016. That's the first yellow bar there. Now, J&J's drug unit is one of the strongest among its peers. The white line is its pharmaceuticals group, which leads revenue growth compared to its other divisions. New drugs drove an annual revenue growth of 7% from 2010 to 2015. Now, this is key as pharmaceuticals are J&J's largest business unit, making up 47% of sales. That is that big orange pie, at least in the third quarter. The medical devices division is being restructured. That contributed a third. That is purple slice, while momentum is slowly building for growth in the company's consumer health and devices unit, and that would be the blue slice of the pie. The Actelion deal would also add a leading franchise to its drug business and cushion a sales erosion by J&J's drug Remicade. That drug faces cheaper competition from Pfizer's biosimilar form of it. Remicade accounts for a tenth of pharmaceutical revenue in the third quarter for J&J. Now, when you look at the stock, it's seen a steady climb over the past year, but investors will really need to pay more attention to President Trump, what he says, what he tweets now that he occupies the White House. Last month, as you'll recall, the president promised to drive down the cost of medicines. Investors had believed that his election would be a blessing for free market health care. We'll be following J&J's earnings when they cross before Tuesday's U.S. opening bell. Joe?
And from earnings to retail, what'd you miss? The slow death of the American shopping mall is not evenly distributed. Recent big-name store closure announcements are happening all over the U.S., but a disproportionate amount have been happening in communities that are already struggling, creating what our next guest calls a, quote, retail rust belt. Joining us now from Atlanta is Connor Sen, a columnist for Bloomberg View. Connor, we talk all the time about the death of the mall and the kinds of retailers that specifically hurts, but there are some malls that are thriving or doing fine. So where are those malls and what characterizes them?
Sure. So malls, physical retail in general, is a phenomenon that's moving from a middle-class suburban activity to an upscale urban activity. So the malls they're not really malls per se that are thriving, are more sort of urban town centers with high-end amenities, restaurants, going out activities like that, and less the traditional mall that we're used to with big box stores like Sears and JCPenney's.
And when a mall closes, it's more than just, oh, people can go shopping online. There's a sense of community that's lost. I just want to read something that you wrote, Connor. You said the loss of big box stores and eventually malls means a loss of social and communal space for communities. Dead malls leave behind a huge physical footprint and infrastructure, while also representing a tax revenue blow to a community between lost property, corporate income, and sales tax dollars. It's clearly a lot more than just a place for people to go exercise or to wander around and pick up something.
Right. So, if you decide to buy your groceries on an online service or Amazon, things like that, your economic activity can move seamlessly. But the issue is that when a mall goes dark, it's not just like turning off a website. You have this massive physical structure that's left behind, and this structure has parking lots and sewage connections and asphalt that needs to be maintained and what have you. And it's what does a community do with that large thing that's left behind?
Are there any examples where communities have figured out how to repurpose some of these decayed malls that are interesting, or do they simply become burdens on the infrastructure without any real hope for turnaround when they go dark?
There's not any one-size-fits-all solution yet. A lot of it depends on the community. So you could have paintball centers, health clinics, co-working spaces, all sorts of things you can do, but the question is just what can the community support, if anything?
So how are some communities addressing this, though? I mean, is there an instance where they've done something that kind of slowed the descent, or is it just kind of inevitable that they go the way they do?
So there are sort of two paths that a mall can take when it loses big box stores. One is just sort of fill in the gaps and just, you take a Sears and you put in an Asian market, something like that, and that can sort of slow the bleeding or even maintain it at a different level for a while. And then there's the whole sort of tear it down and redo the whole thing and make it a mixed-use center, maybe have apartments and office spaces and hotels and just really rebuild it completely. And we haven't seen a lot of that yet, but we're starting to see signs that as vacancy rates decrease and millennials sort of move into their home ownership years, that potentially that sort of activity could be more viable than it's been over the past 5 years.
Connor, in a different Bloomberg View piece, you talked about how more and more professional couples might decide that having both parents working in a very expensive urban center is not good economics, and that they theoretically, if possible, might do better by having one parent working but moving to a much cheaper location, perhaps one of the parents telecommutes or something like that. If that were to become a big trend, what parts of the country do you think would benefit most from that emerging structure?
You'd see places that people want to be. So, you know, take a city like Chicago. Why does Chicago exist? It exists because we needed a place right there where factories could get their goods to market via water. And we don't need that anymore. And so people can now go places with good weather, outdoor activities, near amenities that they like. And so if you can find those places that have those things that are offered at a relatively affordable price, those are the types of places you should be looking at.
And it kind of sounds similar to the problem of malls. If you start to have too much depletion of the population stock or too much change from physical to online retail, it doesn't change the fact that there's all this infrastructure that was made for a more thriving time, and someone is going to have to pay to keep it up, as some of these sort of cold state cities struggle with this stuff.
Right. Infrastructure has fixed costs, and it's the sort of thing where maybe something's viable when 1 million people are using it, but once you drop to 800,000 or 900,000 people, all of a sudden the economics don't work. And you can see that with newspaper deliveries, and it's certainly the case with malls as well.
All right, Bloomberg View columnist Connor Sen, thank you very much.
Thanks for having me.
And I just want to give you another update on the headlines we've been getting on Treasury Secretary nominee Steve Mnuchin. He was replying to the Senate in a document obtained by Bloomberg, saying that an excessively strong U.S. dollar may be negative in the short term, so echoing some of what President Trump has been saying before. And, Joe, we saw an immediate reaction in the dollar in that the dollar index took a leg lower. It's not excessively lower, but a noticeable reaction. In addition, Steve Mnuchin also saying that we hope for sustained economic growth exceeding 3%. And he would also enforce existing sanctions against Iran and Russia. The answers really run the gamut because they're in response to questions that the senators have posed to Steve Mnuchin following the 1 day of confirmation hearings.
And we are seeing the dollar weaker, but it is pretty modest move, still notable. Let's go up. We have a live shot in the Senate at the Foreign Relations Committee. We are still looking at they're getting ready to vote on the Tillerson confirmation, but that hasn't happened yet. You can watch those proceedings on Live Go on the Bloomberg.
What'd you miss? Lindiwe Mazibuko, the former South African parliamentary leader of the Democratic Alliance, joined Bloomberg Television at the World Economic Forum in Davos. Derided because of her age and criticized for her looks by opponents, Mazibuko became one of South Africa's most feared politicians by the ruling ANC. Bloomberg Walk the Talk contributor Shelley Zallis asked her how she got her start.
I entered politics very young as a political staff member.
How old were you?
I was 27. I was disillusioned with the state of South African politics, and I wanted to make a change, and I was sick of complaining about it and not making a contribution. So when I graduated university, I applied for a post with the parliamentary opposition, because that was the party I felt I could support at the time. And before I knew it, I was coming together with 3 of my fellow staff members to run for office. And then 3 years after that, having served as the party national spokesperson, I was running for leader of the opposition. And all of these are things I did because I would feel a sense of disillusionment, a sense of unease with the status quo and a desire to change it. And after thinking about it, I would realize that the solution lies with me. So that was what took me through the path of becoming first a staff member, then a backbench politician, and finally leader of the opposition.
I mean, your story is so incredible, and I think especially how you felt that sense, the need to be able to change or disrupt the status quo. Yeah. What was that like as a woman in politics in South Africa?
It's so strange. I never anticipated how front and center my gender would be, and that was incredibly naive of me, because of course one of the reasons I ran for office and ran for leader of the opposition was precisely because of the shortage of women in senior leadership positions, and because I thought we needed to change that and change the direction in which the party was speaking to voters. And but you know, I thought it would be an issue. I did not think it would be front and center, and it was this, you know, it was the lens through which I was analyzed, through which my leadership was analyzed. It was the tool, my gender was the tool that my opponents would use to try and insult me in Parliament, you know, insult my hair, insult my clothes. You know, my age would be folded up into that, my race into that. So my identity was a huge part of my political career in a way that I just never anticipated. There were difficult days, but for the most part, I realized that I was doing something different. We were doing something different. And difference and change invents resistance, and that's what was going on. And so we understood that we just had to keep pushing and keep pushing and keep pushing until we broke the mold and helped people to understand that we need a diversity of leaders in South African public life.
So what was it like, you leading the opposition party with the president of South Africa, that first moment where you came out with your voice in such an impactful way? What did people say about you?
So I suspect that people expected me to be perhaps more docile than I turned it out to be. And my team and I realized from very early on that we would have to punch very, very high, very high above our weight in order to convince South Africans that there is nothing unusual about a young woman challenging a president in his 70s on policy, on delivery, on governance, on constitutionalism, because that is the role of the leader of the opposition in the House. That is your job, no matter who you are, and if you campaign for that role, you have to do the work. So, you know, my first interaction with the president directly would have been question time or during a State of the Nation debate, and I think it was unexpected for a lot of people that I would, having secured this position, having been elected to the post, go out and do my job as forcefully as I decided to. And it took a long time for people to adjust to the notion that a woman in her 30s could challenge a man in his 70s on a public stage in South Africa.
I'd bet on you any day.
But they adjusted. They have adjusted, and it's now become the norm. Young people stand up and challenge the president in the House every day now.
Women as well?
Mostly men, unfortunately. There's still a very, very big shortage of young women in politics. But increasingly women are finding their space. Women in my own political party, who I used to work with, who I had mentored, who I had known, you know, when they were like me in their early days of their career as political staffers, are now in Parliament, in the legislatures, challenging for power. I wish there were more of them, but I'm incredibly proud of the young women I've seen move through politics and make an impact.
And we have some breaking news. Donald Trump has named Ajit Pai the chairman of the FCC. He was already a commissioner of the FCC. Right. He's a Republican. He's against net neutrality. So that's pretty much all you need to know right now. When we come back, what you need to know for tomorrow's trading day. This is Bloomberg. The president meets with the heads of GM, Ford, and Chrysler.
That's all for What You Missed. Thanks for watching.
Have a great evening. This is Bloomberg.
And you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump is promising tax cuts, regulation cuts, and what he called a very major border tax. Mr. Trump spoke at a breakfast meeting with business leaders he named to an advisory panel. The president said his administration believes it can cut regulations by 75%. He also met today with labor leaders and workers. Florida Senator Marco Rubio says he will vote for President Trump's Secretary of State nominee, Rex Tillerson. Rubio joins fellow Republicans Lindsey Graham and John McCain in saying they will support Tillerson despite ongoing concerns about the former ExxonMobil CEO